Welcome to another episode of Explained by AI. Imagine a world where those cat videos and makeup tutorials you love could actually sway the stock market. That's the bizarre reality we're unpacking today. We're diving deep into how YouTube's algorithm, its relentless hunger for views, can send shockwaves through the financial world.
It's a fascinating paradox, really. You have this platform designed for entertainment, and it's become this force to be reckoned with in the realm of finance.
Yeah, and you might be surprised just how far this rabbit hole goes.
The YouTube algorithm is constantly analyzing your behavior, what you watch, how long you watch it, what you like and comment on. And then it uses that data to feed you more of what it thinks you want.
So the more a video grabs your attention, the more the algorithm pushes it out to others.
Right, it's like a popularity contest on steroids.
And this has profound implications for the financial markets.
Precisely.
Think about it. A charismatic YouTuber with millions of followers confidently predicts a certain stock is about to skyrocket.
Yeah, and that prediction instantly reaches an audience that might be more inclined to trust this personality than, say, a traditional financial analyst.
Right. And that trust translates into action. Some viewers might rush to buy that stock based solely on the YouTuber's recommendation without doing any further research. And that surge in demand can artificially inflate the stock's price, creating a self-fulfilling prophecy.
This is where the concept of herd mentality comes into play. People, especially when it comes to something as complex and often intimidating as finance, tend to follow the crowd.
They see a video going viral, everyone's talking about it, they don't want to miss out. It's the fear of missing out, or FOMO, in action.
Exactly. And this FOMO can lead to impulsive, often irrational investment decisions. We saw this play out dramatically with the GameStop short squeeze.
Yeah, the GameStop phenomenon wasn't just some random internet meme. It exposed the raw power of this YouTube-fueled herd mentality.
Prior to GameStop short squeezes were this obscure financial maneuver most people didn't even know existed. But then YouTubers started breaking it down, explaining how a group of individual investors could theoretically band together to drive up the price of a stock that hedge funds were betting against.
And suddenly this complex financial strategy became accessible, even appealing to everyday people.
The YouTube algorithm played a crucial role in amplifying those explanations. Videos about the GameStop short squeeze were racking up millions of views, spreading like wildfire across the platform.
It became a David versus Goliath narrative, the little guy taking on Wall Street.
Right, and it captured the imagination of millions.
The impact was undeniable. GameStop's share price went from around $20 to over $480 at its peak.
Wow.
It was a stark reminder that YouTube isn't just reflecting market trends, it can actively shape them.
And this power extends beyond the stock market. The world of cryptocurrency has been particularly susceptible to YouTube's influence. We've seen countless examples of coins experiencing meteoric rises, driven largely by hype generated on the platform.
Dogecoin is a prime example. It started as a joke, a meme-based cryptocurrency.
But thanks in part to the tireless promotion of certain YouTubers, Dogecoin became a multi-billion-dollar asset. YouTubers were churning out videos about Dogecoin, extolling its potential, urging viewers to buy in, and their enthusiasm proved contagious.
Then there's the Elon Musk factor. His cryptic tweets about Dogecoin sent shockwaves through the crypto market. And guess where those tweets were dissected, analyzed, and amplified?
YouTube, of course. Countless creators devoted entire videos to deciphering Musk's pronouncements, further fueling the Dogecoin frenzy.
What's fascinating is that Musk himself is a master of using YouTube to his advantage. He's appeared on popular channels like the Joe Rogan Experience and Lex Fridman podcast, where he's shared his thoughts on everything from space travel to cryptocurrency.
Oh yeah, and those appearances generated millions of views and sparked countless reaction videos and discussions on YouTube.
Musk's influence on public perception, particularly when it comes to technology and cryptocurrency, is undeniable. And YouTube has served as a crucial platform for disseminating that influence.
But it's important to acknowledge, though, that YouTube isn't all hype and manipulation. The platform has also played a significant role in educating people about cryptocurrency. There are many channels dedicated to providing in-depth explanations of the technology, the risks, and the potential rewards.
These educational channels can be incredibly valuable, especially for those who are new to the world of cryptocurrency. But it's crucial to remember that not all information on YouTube is created equal.
Just because someone is charismatic and confident on camera doesn't mean they're a reliable source of financial advice.
There are plenty of scammers and charlatans lurking on YouTube looking to exploit unsuspecting investors. That's why it's absolutely essential to be discerning about the sources you trust.
Look for creators who have a proven track record of accuracy, integrity, and a genuine understanding of the financial markets.
And most importantly, always do your own research before making any investment decisions. Don't rely solely on what you see on YouTube.
It's about using YouTube as a starting point, a springboard for further exploration, not the ultimate authority on all things finance. Let's face it, YouTube can be a financial minefield. Navigating this landscape demands a healthy dose of skepticism.
Yeah, we've talked about the positive potential of YouTube for financial education. But for the average person trying to make sense of the financial world, it can feel like stepping into a casino.
That's where the allure of YouTube comes in. It offers this seemingly safe and familiar space where complex financial concepts are broken down into bite-sized pieces.
Right. It feels like a friend casually explaining things to you over coffee, instead of like a formal meeting with a financial advisor.
But that sense of casual intimacy can be misleading. Just because someone comes across as likable and knowledgeable on YouTube, it doesn't make them a credible financial expert.
Right. That's why critical thinking is so crucial. We need to empower viewers to question everything they see and hear,
Yeah, to look beyond the flashy thumbnails and the clickbaity headlines.
to consider the creator's motivations,
Yeah.
their potential biases.
And always, always verify information with multiple reputable sources.
It's about transforming viewers into savvy consumers of financial content, not passive recipients of whatever the algorithm decides to feed them.
Think about the rigorous process scientific studies undergo. They're peer-reviewed, scrutinized for accuracy, challenged for potential flaws.
So we need to apply that same level of scrutiny to financial information we encounter online, especially when it comes from sources that are driven by views and engagement.
Because at the end of the day, it's your hard-earned money on the line.
And the consequences of making uninformed decisions can be devastating.
So let's get practical. What are some tangible steps viewers can take to navigate this YouTube financial landscape?
First and foremost, check the creator's credentials.
Do they have a legitimate background in finance? Are they certified financial advisors? Have they written books or published articles in reputable financial publications?
These are all indicators that the creator possesses a certain level of expertise.
But even if a creator boasts impressive credentials, it's vital to be aware of potential conflicts of interest.
Right. Are they pushing a particular stock or cryptocurrency in which they have a personal financial stake?
Are they receiving compensation from a company to endorse their products or services?
Transparency is paramount. Look for creators who are upfront about their affiliations and potential biases.
Another major red flag is when a creator throws around bold predictions or guarantees.
Yeah, no one can predict the future with absolute certainty, especially when it comes to the unpredictable world of financial markets.
If a creator is promising unrealistic returns or claiming to have a foolproof system, approach with extreme caution.
It's often a sign that they're more interested in generating hype and clicks than providing sound financial guidance.
Pay close attention to the tone and language used as well.
Is the creator using fear or greed to manipulate viewers' emotions?
Are they resorting to sensationalism or clickbait tactics to grab attention?
These are all warning signs that you should proceed with caution.
Diversifying your information sources is crucial.
Don't fall into the trap of relying solely on YouTube for your financial news and analysis.
Read established financial publications. Consult with trusted financial advisors. Seek out diverse perspectives.
The more informed you are, the better equipped you'll be to make sound financial decisions.
Cultivating a healthy skepticism is equally important.
Don't blindly believe everything you see and hear online.
Question the motives of the people sharing information. Be critical of the data they present.
Remember, the internet is awash in noise and misinformation.
Your job is to filter through that chaos and find the signal, the credible insights.
And never hesitate to ask questions.
If you're unsure about something, do your research. Seek out clarification from reputable sources.
There are countless resources available to help you navigate the complexities of finance. You don't have to go it alone.
Now let's zoom out and look at the bigger picture.
So the emergence of YouTube as a financial influencer is a symptom of a much larger trend.
The democratization of information.
In the past, access to financial information was largely restricted to a privileged few.
Those who could afford expensive financial advisors or who had the time and resources to conduct in-depth research.
But the internet and platforms like YouTube have changed the game. Financial knowledge is now more readily available than ever before.
This accessibility is empowering. It allows individuals to take control of their financial destinies.
But this newfound power comes with a responsibility to be discerning.
The ease with which misinformation can proliferate online is a legitimate concern.
And the potential for manipulation is always lurking in the shadows.
That's why being a critical consumer of information is paramount.
Thinking for yourself, making decisions based on solid evidence, and not just blind faith or fleeting emotions.
The financial world is constantly evolving, growing more complex.
So staying informed and remaining vigilant are your most valuable assets.
Be curious, ask questions, never stop learning, and you'll be well equipped to navigate this ever-shifting terrain.
So where do we go from here? What does this all mean for the future of finance?
It's clear that we're entering a new era. One where the lines between traditional finance and social media are blurring.
Yeah, at an alarming rate.
Tweet, a YouTube video, these can ripple through the market just as powerfully as any report from a Wall Street analyst.
And in this new landscape, the individual investor has more potential influence than ever before.
Absolutely. But as we've discussed, that influence comes with a hefty dose of responsibility.
Yeah.
Education is paramount. We need to equip people with the tools to critically evaluate the information bombarding them online and guide them toward making sound financial decisions.
In platforms like YouTube, they can't just sit back and watch this unfold. They have a responsibility to actively combat misinformation and shield users from those looking to exploit them.
It's a two-way street. Platforms need to step up and individuals need to take ownership of their financial well-being.
The financial world is a dynamic, ever-shifting landscape. Staying informed, staying vigilant, those are your greatest defenses.
Never stop questioning, seeking diverse perspective learning. Knowledge truly is power in this new financial reality.
So the next time you're scrolling through YouTube and stumble upon a video touting the next hot stock or a can't-miss cryptocurrency, take a breath and remember everything we've discussed. Do your own research. Don't get swept up in the hype, and remember that algorithm. It's designed to keep you watching, not necessarily to make you wealthy.
Use YouTube as a tool for exploration, a starting point for your own due diligence, but never mistake it for the ultimate financial authority.
Do you have any topic that you would like to have explained? Drop it in the comments.